If you think Tesla's growth story ended with this Q4 earnings report, you're probably looking at the right numbers, but through the wrong lens. The market saw a delivery miss and immediately assumed Tesla is slowing down. But when you zoom out, this quarter looks less like a failure and more like a transition point the market hasn't fully understood yet. Hi, this is Ken. In this video, I want to help you do 3 things. First, understand what actually happened in Tesla's Q4 beyond the headlines. Second, see what the market is missing about Tesla's real direction right now. And finally, think clearly about what this moment means if you're a long-term Tesla investor, not a short-term trader. By the end, you should have a calmer, more structured way to look at Tesla at this price level. Let's start with the facts, without emotion. Tesla's Q4 2025 deliveries came in slightly below market consensus. Not a collapse, not a shock, but technically a miss. And yes, after the report, the stock sold off and briefly traded in the low $440 range. But at the same time, production actually exceeded deliveries. That tells us something important. Factories are running, capacity hasn't disappeared. This is not an operational breakdown, and there's one more number that matters here. Tesla's energy storage deployments hit a new all-time high in Q4. That part of the business had its strongest quarter ever, yet the market reaction focused almost entirely on one word: deliveries. So, the real question is not whether Q4 was perfect. The question is whether this was genuinely a bad quarter or simply a misunderstood one. Several analysts pointed out something interesting. Q4 didn't suddenly become weak. Q3 may have been unusually strong. Why does that matter? Because part of the demand that normally would have shown up in Q4 was likely pulled forward into Q3. Tax incentives, policy timing, and buyer behavior can all shift demand across quarters without changing the underlying trend. If you look at Q4 in isolation, it looks disappointing. If you look at Q3 and Q4 together, the picture is much more stable. There's no clear evidence of a sudden demand cliff. And that brings us to a bigger question we need to pause on for a moment. Because numbers alone don't tell the full story. What really matters is whether Tesla, as a business, is structurally weakening or simply being judged by the wrong metric at the wrong time. So next, we need to step back and ask a more fundamental question. Is Tesla actually losing strength as an EV company, or is the entire EV market going through a normalization phase that investors are misreading? To answer that question, we have to zoom out and look at the EV market as a whole. Because Tesla is not operating in a vacuum. Across the industry, EV demand is clearly normalizing. Price competition is intense. Interest rates are still a headwind. Government incentives are changing market by market. Many EV makers are struggling under this pressure. Some are cutting production, others are burning cash at an unsustainable pace. Against that backdrop, Tesla is still producing at scale, its core models are still selling, and there's no sign of a sudden operational failure. So the issue isn't that Tesla has become uniquely weak. The issue is that the EV market has entered a more mature, more competitive phase, and that's exactly where Tesla's strategy starts to matter. Here's where I think the market is getting stuck. Many investors still see Tesla primarily as a car company. If deliveries miss expectations, the story ends there. But Tesla itself is no longer managing the business that way. Deliveries still matter, of course, but they are no longer the only or even the most important indicator of long-term value creation. Energy storage, software, autonomy, and AI-driven services are becoming larger pieces of the puzzle, and yet those areas are barely reflected in how the stock trades quarter to quarter. That disconnect is why a record quarter in energy can coexist with a sharp stock sell-off. The market is reacting to the past version of Tesla, not the one that's actively being built. Here's the part that surprised me the most. Tesla's energy business has characteristics that traditional automakers would love to have. Once energy storage systems are deployed, they tend to stay in place for years. They are infrastructure-like assets, not discretionary consumer purchases. Unlike cars, you don't need to convince customers to upgrade every few years. And unlike vehicles, this business is less sensitive to short-term economic cycles. In other words, the most stable and predictable part of Tesla's business just had its best quarter ever, and it was almost completely ignored by the market. That's not because the energy business isn't important. It's because it doesn't fit the old narrative investors are comfortable with yet. When I look toward 2026 and beyond, I don't see Tesla narrowing its focus. I see its systems starting to connect. Vehicles generate data. AI and full self-driving turn that data into intelligence. Energy storage supports a broader infrastructure layer beneath it all. These aren't separate businesses anymore. They're slowly forming a single ecosystem. Q4 doesn't look like the end of growth in that context. It looks like a slightly messy snapshot taken during a structural transition. And historically, markets tend to misprice companies the most during transitions, not during clear boom or bust phases. So the real question I'll leave you with is this: which Tesla are you evaluating? The Tesla of quarterly delivery fluctuations, or the Tesla building a long-term platform across energy, AI, and mobility? At the same stock price, both interpretations can exist. One sees risk, the other sees optionality. For long-term investors, moments like this aren't about certainty, they're about clarity of perspective. And right now, I think the market's perspective is still catching up. That's all for today. If this analysis helped you think more clearly about Tesla's Q4 and what really matters going forward, feel free to leave a like. I post Tesla-focused analysis like this every day, looking beyond headlines and into long-term strategy. If that's the kind of thinking you value, subscribing might be worth it. Thanks for watching, and as always, enjoy life with Tesla. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.